All right, three things in 3 minutes. Let's get it. So, mortgage rates have quietly continued to improve over the last week. Right now, average 30-year fixed rates nationally are around 6.75%, which is great. But the bigger news is what's coming out of DC. It's not in the charts, it's in the chaos in the administration. So, President Trump just signaled he might announce a replacement for Federal Reserve Chairman Jerome Powell before Powell's term is up. This would be unprecedented. If he names a new shadow Fed chair, it could shake up the bond market and mess with mortgage rate expectations. Why? Because you'd have two voices influencing the markets, one official, one political. This move would basically weaken the Fed's independence, creating confusion over who's calling the shots on interest rates. Some market watchers are already betting on faster cuts because of this, but others are warning it could backfire, push rates up long term, and undermine global trust in our financial system. So, the bottom line, rates may be easing now, but this political experiment could be the wild card that changes quite a bit. All right, here's another wild card you might have missed this week. For the first time ever, the US housing system is seriously looking at crypto as a mortgage asset. This week, the Trump administration ordered Fannie Mae and Freddie Mac, that government clearinghouse, to prepare for crypto to be considered in mortgage underwriting. That's big. Right now, if you've got Bitcoin or Ethereum or other crypto, it doesn't count towards reserves unless you sell it, convert it to cash, hold it in a US bank, and jump through some documentation hoops. But under this new directive, assets in US regulated centralized crypto exchanges could start counting even without being sold. It's not final yet, but it's the first sign that the government might treat crypto like a legit part of your financial profile. There are concerns. Crypto is volatile. It's hard to verify. It's damaging to the environment and not exactly built for traditional finance. So we're still in the early days, but the message is clear. We've moved from the if crypto plays a role to the when crypto plays a role part of the story. Let me know what you think. I'm actually curious. And then finally, let's talk a little bit about content and content strategy. If you are trying to market better, if you're trying to make yourself more findable online using social media or newsletters or YouTube series, etc., here's how I think about it and maybe what you can employ. I use something that I call the 1-3-1 content mix. So when I post, I usually do one personal story, 3 educational pieces, and then 1 offer. That's it. And I repeat it weekly. The personal story is something that builds trust. It shows vulnerability because people want to work with humans and not with logos. The offer reminds them that I'm in business. I'm around. Call me, text me, message me, and invites them to reach out. But here's where people mess up on the educational part. Don't post generic how to buy a house tips or recycled headlines. Use the how I format instead. How I helped a buyer win in a competitive bid. How I handled a tricky appraisal situation. How I learned to not trust Zillow estimates. Stories draw people in, and these lessons stick. Again, this isn't just for social media. It works for your newsletter, your mailers, YouTube videos, your online presence, anything client facing. All right? Y'all got this.